Welcome to the Phil Vogel Podcast, where we talk all things mergers and acquisitions, as well as all of the other elements, trends, and technology impacting dealers and our industry today. Please hit the subscribe button right now. And before I introduce today's guest, I want to introduce you to and thank our show's title sponsor. Techyon is a new kind of DMS. In fact, well, it's way more than a DMS. Think of it as an automotive retail cloud. If you haven't heard or seen Techyon in action, I promise you will very, very soon. Techyon is a single platform that digitizes and runs your entire business and allows complete integration with our industry's ecosystem partners. And they don't charge any integration fees. Techyon's AI engine gathers insights and personalizes the consumer and dealership team members' user experiences, smoothing out these friction points that are typically involved in the transaction. Increased profitability comes as a result of Techyon's machine learning algorithms that personalize upsell and cross-sell opportunities. Multi-dealer, multi-OEM, and enterprise views deliver actionable performance indicators and KPIs. And the best part, as I said, there are zero integration fees, unlimited data access, and you own the data. It's yours. And the best part, the icing on the cake, is you can cancel your contract at any time with 30 days notice. Check out Techyon today. Techyon.com. Bruce Thompson is a serial entrepreneur, and his most current role is CEO of CarOffer. Rather than me tell you about CarOffer and Bruce, let's get right into it. Welcome to the Phil Vogel Podcast, Bruce Thompson.
Thank you very much. Glad to be here, Phil.
It's great to have you. I'm glad we finally connected. Got a little rain there in Dallas today, huh?
Absolutely. It's buckets, right? So I think we're supposed to get 8 to 10 inches this week. So it's one of those weeks, but you got to be happy for the rain.
Is Dallas like the Bay Area, where it's like when it starts to if it rains and it hasn't rained in like a month or so, everybody freaks out?
Yes, yeah. So we had a really bad drought 5-7 years ago, but since I guess they call it the El Nino. It's been that Pacific waters have been warm, and so we've getting a lot of rain the last several years. So it's been we're almost in the tropics here in Dallas these days.
Well, it sounds like the Bay Area where I'm at here. So, what is CarOffer, and what made it so interesting that CarGurus needed to acquire you for $2 billion cash?
So
well, maybe not two, not 2 billion, right? But it was
right. You know it's going to be that way one of these days, right? Yeah. But essentially, it's an untraditional dealer-to-dealer auction platform, but it's unlike any auction platform you're probably familiar with. It operates much more like the stock market, and it really allows a dealer to go in and order pre-owned cars like he might order new cars from a manufacturer. And then when he does so, he'd place like a limit order on those particular cars like he might for Apple stock, as an example. Right. And so he's going to give us a price up front. He's going to give us quantities. He's going to give us equipment, specifics on the cars that he wants. And once he places those offers in what we call our buy matrix, they're binding. And the buy matrix then, what it does is all of our dealers, we're 5,000 rooftops now, just crossed that milestone last week. And we've done that basically in about 20 months, which is unbelievable. But we're here today. But yeah, it's been
so
crazy.
And inside of 2 years, you've got 5,000 rooftops?
We actually enrolled 1,500 rooftops in March and April of this year alone. So I've been doing this thing for 25, 30 years. I've never seen anything quite like it. But hey, it really is catching on. We are our transaction volume on the platform has been increasing over the last several months, about 60%, 62% a month from a growth perspective. It's a
62% month over month.
month over month. Yep.
Wow, that's
Yeah.
significant.
And
But Bruce,
yeah,
before
go
you
ahead.
get, just tell, what is like, I mean, is CarOffer, in terms of the value proposition to dealers, what do they all say to have that kind of growth, right? 5,000 rooftops inside of 2 years, 20 months. I mean, that's a
Right.
significant number. So what was the value proposition that said every dealer goes, wow, we have to get on board?
Well,
Because you started in 2019, right?
right. We did our first transaction in September of 2019. Correct.
Right. So
And we
no, I was just going to say,
yeah,
so what is it?
it
What's the
started out
special
great.
sauce?
Yeah, with the momentum, it's a different way to do things, right? I mean, dealers are, and you get some dealers that are apprehensive, but once they get on the platform and they start seeing the cars that are coming in, it is the most efficient way to acquire inventory on the planet. And on a selling side, I log into my dealership on our portal. All the bids are already there. I mean, we're gonna give binding offers on a dealer's inventory 24 hours a day, 7 days a week, and he didn't do anything really to launch those cars up there. He could, if he wanted to, launch a car on a manual basis, but typically,
Right.
we're taking the internet feeds, and all the cars are valued, and the bids are just continually refreshed, 24 hours a day, 7 days a week. And so today we have about $5 billion of live offers that are out there on any given day on about 350, 400,000 cars. And I think dealers gravitate to it because of the simplicity, the efficiency, the ability to acquire exactly what they need with discipline. So when they come in and set a buying strategy with us, it's not like they've gone to an auction, raised their hand, and maybe got paid too much. I mean, they can come in with us and very systematically, we can tell them you're missing these particular Tahoes by 0.5% or, whatever it may be, and they adjust that strategy or that pricing rule, and then it takes off. If that makes
So
sense.
is there a bid? Bruce, is there a bid and an ask?
No.
Like you.
So
No?
it's just like, Phil, you were to go out and say, I want to buy Apple stock at whatever the number is, $125 a share. We're gonna and let's say that you're the I find a seller on the other side on the stock market that's willing to sell those shares at that price. That order gets executed, right? In our case, what happens is I have a dealer come in and he says, okay, I want to buy 5 Tahoes. I want them to be these colors with this equipment and these mileage parameters. I'm willing to pay a maximum transportation of X, whatever that may be.
Right.
And let's say that he has a highest matrix offer within that mileage range parameter. I'm liable to place, I don't know, 4,000 to 5,000 offers on Tahoes that we see in dealers' inventories that fit his parameters. Those are his offers. The first 5 dealers, because he wants 5 of those Tahoes, that click the button and say, I'll take that offer. Those offers are fulfilled. He's bought his quota of 5. The balance of his 5,000 offers would drop, and then the next highest matrix bidder surfaces to the top, and we fulfill that quota. And on the backside, it works just like a NASDAQ level 2 trading screen. So all we're doing all day long is fulfilling quotas. For him to be able to go buy those 5 Tahoes, as an example, right? It's physically impossible to look at that many Tahoes, in a day or 2 days or a week, for that matter.
Yeah. So I'm interested in the assumptions you take into account in developing your, you call it your buying matrix. So what does that look like?
So it basically is a way for him to come in and configure any type of car. He can set up hundreds of rules. He can set up generalized rules for imports or domestics. He can set up price bands. He can set up, mileage and engine types and packages, literally as granular as he wants to get. Once he has the cars that in his quota that he actually wants to go acquire, he would then give us what he's willing to pay for those cars, and that could be a benchmark of a black book as an example. We have our own index, a variety of different indexes that he could place an offer.
That's a great point. So here's a question that came up. I was telling somebody that I was going to have you on the podcast the other day, and somebody was saying, "Oh yeah, I know about CarOffer." I said, "Do you do business?" He said, "No." He says, "We've got VAuto," and I said, "No. This is a totally different. It's an auction platform. It's the logistics. But how can you, in terms of the pricing model, can you kind of describe?" Tell us what's different about the VAuto and why that might be confusing for some people.
Yeah, so VAuto is an appraisal tool, right? So we've had a couple of those companies in our past. So we don't compete with VAuto in any way. As a matter of fact, we have some integration there with them as well. So at the point of appraisal, they could actually send us that information, and at the point of appraisal, we hit that car against our matrix. And it's like I put 5,000 dealers on that particular dealer's lot this Saturday that are all bidding all his fresh trades. The ability for him to trade for more cars with that type of buying power on the lot, right, it goes up dramatically, right, because I've got really that many people in my custom lane, if that makes any sense. And it's all automated, and it all happens in a couple of seconds. So from a VAuto perspective, that's an appraisal tool. I'm taking in a trade. I'm looking at the various books. I'm making up my own mind in terms of what I want to put in that particular trade. All we would do is basically be another source that says, you're making a decision what you want to put on that trade. And by the way, here's what we're willing to pay you for that car right now, so you don't have to speculate on it.
Right.
The other thing in VAuto is, you can price by, dealers will actually place a trade-in value by a market price, or the V book, I think they call it. One of the reasons we did the deal with CarGurus, obviously, is they have what they call the IMV, right, which is another index, which is a market index. So dealers on our platform can say, you know what, I want to buy a car, but I want them to land at, CarGuru IMV with a $1,200 front-end margin, as an example. And so we just reverse the math, and the offers get displayed. So it's very flexible. We let a buyer, configure, his strategies, and basically about whatever method he's comfortable with.
So, we're talking about, wholesaling and trading vehicles across the country. I mean, have you, logistics getting vehicles to and from different locations, a challenge? And have you been able to, has the deal with CarGurus, have you been able to leverage those assets as well in that endeavor?
So everything is automated in our system from a transportation perspective too. So we're going to monitor as soon as a car is accepted. We're going to send out a third-party inspector, typically within a day and a half. Let's make sure that car's in the condition. As soon as it passes, I have a team here that looks at every one of those. As soon as it passes that inspection, the transportation's automatically dispatched. And then we track that from A to Z. Our average transportation move right now is over 650 miles. So the regional disparity really plays a key role in our platform. I will tell you that the constraints are tight right now. We're seeing, obviously the manufacturers aren't shipping as many cars, so that you don't have as many transporters that, and COVID obviously had an impact. So we're seeing some delays in transportation. It just means that we have to pay more money to expedite cars, which comes out of our pocket, but hey, it's worth it at the end of the day.
Right. So how are you and your team able to grow so fast? I mean, 5,000 rooftops in under 2 years that's a big number. So how do you attribute it? I mean, you mentioned COVID a second ago, and obviously it could be, some of that, but I think it was more in terms of, Well, you tell me.
Well, we were growing really fast. Like I said, we did our first transactions in September of 19. We pretty quickly got in over our skis, to be quite honest with you. We really didn't anticipate the adoption would take hold as quickly as it did, but hey, it did. COVID hit, and I was scared to death. I got to be honest with you. We really had to shut down all operations simply because transporters couldn't get in and out of dealerships or states because the dealerships were closed. The DMVs closed down, and so we felt that pain that every auction operation in the country did. It was a blessing in disguise for us, in retrospect, simply because startups aren't necessarily afforded an opportunity to hit the pause button and say, hey, we're in a bit over our skis. There's some development work that we need to get done that would really streamline some of the processes for us. So what happened is it gave us a breather that we took advantage of, built out additional logistics, title tracking, all those type of applications that we needed, got that done. And then when the market started to open back up, it played right into our hands, simply because the brick and mortars were shut down. Dealers needed new, alternatives to find cars. I remember back in those times, you had low interest rates, you had stimulus, the manufacturers were shut down. We were almost seeing a replay of that here in 21. But the demand went through the roof. Dealers needed cars. And so I think it just fueled or throttled our growth exponentially. And that's carried on. Today, with the chip shortage that we have, there's no visible end in sight, I don't think. I think we're going to see some of the same demand through the end of the year, if not longer than that. I think we're in for quite the roller coaster. But it did play into our hands. And then the way you really grow a company at this pace is that dealers that like it tell other dealers. And really, almost all of our growth has been organic. We've not done a lot of advertising. It's just, one dealer telling another, and, they'll get online and say, we want to see more about the program and join. And, a lot of the big dealer groups are on the platform, from AutoNation to Sonic to Group One to Asbury, Penske stores, Lithia. So we have all those players on as well, which obviously helps you grow quick because you get a lot of stores at once. But knock on wood, we will take it. We've been through this before. We've been in the business for 25 years. We've got an incredible operations and integration and training team, advisor team. So we were able to lay down the process as well, and have been able to handle the growth. So I would tell you today that things are operating really smoothly. We are anticipating, obviously, with the CarGurus transaction, that growth is exponential too, because they have 30,000 rooftops on their platform. So the distribution there, they become another distribution arm for us, introducing us to their dealers, which is another boost in the arm. So we think that momentum continues for quite some time.
So what have the last, a couple of months been like? With sourcing, with the inventory being so tight, Bruce?
I've never quite seen anything like it. I think today you and I were talking before the show got started that, we probably have 50,000 offers out there that are over the dealer's internet asking prices. It has fueled, last year, right after COVID, we saw things similar, but it in no regard has it been at this type of velocity in terms of used vehicle appreciation. And, I anticipate that appreciation might normalize a bit, but I think the demand is still going to be high. I don't think you're going to see a big drop off in values like we typically do, each fall. I think you're going to see that demand kind of keep pace until we have a relief from the chip shortages. I think that you're going to see this the demand stay high. Rental car companies, lease companies, obviously defleeted, and they are trying to acquire inventory. They can't get them from the manufacturers, so they become a buyer, a substantial buyer, because they need a lot of cars, and so that adds fuel to the fire. So I don't see
What about, when you look, just even rent-a-cars, right? Today, the rent-a-car agencies, I was looking the other day, and I posted something on LinkedIn, actually. It was stunning. I said, what can I rent a car for one day in Portland, Oregon? And I, queried it through Expedia, I think, and Hertz Avis budget. And it was $130 for the day for a midsize. It may be 150, 60. And, so that's, at least, I don't know, 200%, at least 200% more over what it has been.
Right. And I think what's happening, Hertz just came out of bankruptcy yesterday. So they're really gearing up and fleeting back up. And then you have, I anticipate they're probably going to relaunch their retail locations probably sometime this summer, which is going to create more demand. Obviously, the Enterprise, the Avis, they're all needing inventory. Cars weren't driven as much, during the pandemic, and from a rental car perspective. So the ones that they do have, they don't necessarily need to sell because they don't have that many miles on them. So I don't see them liquidating a lot of cars. I think the demand's going to stay there. So I think it's just going to continue to flame the fire.
Well, and I think that the rent-a-car companies, I was reading the other day, I think in Automotive News, that they are actually going out and trying to source additional inventory because they can't get it from the OEMs or dealers. And so they're looking at, aged inventory. A buddy of mine rented a car in LA the other day, and he said it had 70,000 miles on it. So,
we have two of the biggest rental car companies on our platform today. And yes, they are needing inventory. And, they're great buyers for those, late model, typically lower mileage cars. But to your point, they're stretching right now simply because they need the inventory.
Sure. So next, let's just kind of pivot into your platform, getting back to the CarOffer platform. Are we seeing the end of the in-person? Well, everything's moving online. It has been for several years. But are we seeing the end of in-person auctions for cars?
When I started Auto Exchange, probably the best analogy for me, back in 2001, at the time, dealers used their books in their back pocket, what I call their golden gut, to make a decision on what a car's worth.
Sure.
I think I was telling you a couple of days ago that when we came out with it, if AutoNation had not been our first client, and Jeff Dyke was a champion for us, he was running a division down in Houston, we probably would have failed at that company because dealers were, used car managers, very apprehensive about, I don't need a computer to tell me what a car's worth. They thought it was going to replace, could potentially replace their jobs. But what happened was AutoNation mandated the process. And when they mandated the process, it worked. And then when it worked, others wanted to jump on the bandwagon. This is a similar situation in that, you see ACV, you see Trade Rev, you've got us, you've got, all these various players that are trying to disrupt the traditional brick and mortar auction platform. I don't think brick and mortar ever goes away, but I do think that the market disruption is real, and I think it's here to stay. I just think COVID accelerated it. I know I was listening to Jim Hallett had basically written an article. CEO of Odessa Car, and talked about they had a plan to go totally online, which was really a 2-year plan. But when COVID hit, they did it in 2 months. So I think it's changed things. COVID has accelerated things. I think the industry changes are here to stay. I think dealers are looking for alternatives and more efficient ways to source and liquidate. And I think the players that are out there that bring those solutions to the table in the right application are going to be the winners.
Right. I don't think, I don't think that the auction is going to go away per se, but it's not going
Agreed.
to be anywhere close to what it used to be. It's certainly the expense and the infrastructure that the auctions, be it, the big Manheim or
Yep.
Odessa, these guys, the cost, the infrastructure that they build in these auctions and people and technology and logistics, I see all that changing for their business as well, right? They can be much more efficient.
Well,
Um,
I think what's happened is, in my opinion, they're coming back. They're going to cater much more to the fleets and the commercial accounts, right? Because that's a lot of inventory there. They can get it quickly, and they already have those relationships. I think the dealer to dealer, in my opinion, is where the opportunity is right now, the big opportunity, where you see all the fringe players that are capitalizing. But I think it's only a matter of time before that translates into, more upstream with the fleets, the off lease, the OEMs, the captives, et cetera. It's just a matter of time.
right. Can you talk about a little bit about the integration of your company CarOffer into CarGurus and
Mhm.
the kind of I do M&A, with dealers as my core
Mhm.
business, and buyers and sellers are always, certainly buyers are looking to see if I'm going to acquire this deal, how is it going to add value to my portfolio? In this case, we're
Right.
integrating the companies and their processes and products and offerings. And so
Mhm.
how did that, what were the kind of the key ingredients for CarGurus with your
Mhm.
offering?
We to be quite honest with you, I wasn't like I was really looking. It was really early for us, to be frank, to be doing a deal. But that being said, with CarGurus, what really intrigued me about the structure and the deal was that they buy a percentage of our company today. We operate independently here in Dallas. We have a big brother, right? That I've got, basically unlimited resources if we need them. But the most important component to me, or two of the most important components to me in the situation of the deal were, number one, that they had 30,000 rooftops that they could basically plug me into. And number two, that they have 38 million consumers that visit their site on a monthly basis. And I don't think it's at the end of the day, if we can leverage that consumer traffic, and we're not a retailer, so if we can be the ultimate tool that a consumer can go to and get the highest value for a car that they want to liquidate, we're just going to filter all those cars back to our dealer base, and it becomes a fantastic consumer acquisition channel, which most dealers really struggle with because they don't have the scale, the capital, et cetera, to compete with a lot of the big box retailers out there for that volume of
Sure.
inventory. We think the synergy here gives us advantages over any other player in the market, by basically turning that matrix around and not just pointing at dealer inventory, but at consumer cars too.
Right.
So if a consumer goes up, launches a car, thousands of dealers instantaneously compete to give him the most amount of money. So we're confident in the value prop for the consumer, delivering a white glove service, and then taking those cars and dropping them off at our dealer partners is a win for both us, for CarGurus, and for our dealer partners. And
Right.
when everybody's winning, you tend to have a successful platform, we think.
So CarOffer is not the first company you've started and sold. So what
No.
are the other companies and that you've started and sold? And when you conceive of a business, are you building it with a specific acquirer in mind?
The companies that I built in the past, I've basically been SaaS, subscription-based companies. I mentioned we started with American Auto Exchange in '01 was our first really entry into the automotive industry. We had a company before that called Cyber Expo that really was during the internet bubble, that was really the technology experience. But Auto Exchange, I've never really started out to say, I want to build this thing and sell it. What I want to do is build it and build a great company and let the cards fall where they may. Auto Exchange was first. We ended up selling that to JM Family in '05. We then started Lane Logic, which, hey, you got to get up to the plate and swing. We swung at that one. It actually is a precursor to what we're doing today with CarOffer. But we had the Great Recession, and the model just couldn't support what we were doing in a recessionary time. So when my non-compete expired with AAX, we started Red Bumper, which competed with the old tool, competed with VAuto. We sold that company to CDK. Had another company on the new car side we sold to CDK. And then, we have a suite of tools that were acquired by CarOffer when we did the transaction with CarGurus, which is under our Pearl technology umbrella, which we plan to integrate a lot of those tools in the future. But I'm having a blast. I got to tell you, I'm not interested in going anywhere. I don't see me going anywhere for years, simply because sometimes you catch lightning in a bottle, and I think we've got it here, and it's just a blast. It's just a lot of fun, and we're enjoying every minute of it.
So you just mentioned, perfect segue, because my next question was going to be about Pearl. So when you recently moved CarOffer from Plano to Addison, there in Dallas, and so you also moved Pearl Technologies. Can you speak a little bit about that and that business and what's next there?
So we had, as I mentioned before, a subscription-based products. You go to NADA, and there are probably, 70,000 dealers out there, 70,000 vendors out there trying to sell the same products to the same, 17,000 franchise dealers. And from my perspective, I wanted to exit the subscription-based business. I've always felt the transactional model was more suited and more lucrative. And so having said that, all of the Pearl tools we subscribe to our own API. So everything, look at it like a toolbox. And so we've got everything in the Pearl suite, from Express Retail, called Showroom Express, to, equity mining tools and automated tools and a variety of tools. We plan on integrating a lot of those applications into the CarOffer suite, and flipping the switch, and they'll be all transactional. So as an example, a customer that's maybe coming through my service drive, that our Pearl suite can identify that customer is in the appropriate equity position.
Right.
Well, let's send that across to the CarOffer system and utilize the VX application that we have with the Pearl suite. And hey, Mr. Jones, you coming through the service drive today? We'd love to buy that car back, and have him fill out a few questions, hit the matrix with that, and give him a phenomenal offer for that car, and then give the dealer the opportunity. Yeah, see what I mean?
I can see how that, Bruce. How that could, impact a dealer's business right now.
Yes.
That's right now, right? Dealers that don't have their people in the service drive telling people they've got potentially huge equity in their vehicle right now, are missing it, because that is probably the greatest source. Right?
Think about it. Lease returns, service drive, even customers that are in my database today, right?
Absolutely. So running those equity matches on everybody, right? And hitting the DMS, because those customers, most dealers, one thing, certainly that I look at when evaluating the business, and it doesn't when looking at dealers' financial statements and what have you. That tells part of the story, but the names in the DMS and the active users in the service database and the variable database, those are gold. That information is gold, and that is what a buyer is buying, whether they know it or not, right? And so the gold.
It's crazy. You're absolutely right. Yes.
Yeah, I just think that it's a huge opportunity. So you're developing inside of Pearl Technologies additional tools for CarOffer and what have you.
Yeah, right? So it's one integrated platform, right? So dealers won't have to log into anything separately. They can just say, "Yeah, we want it," and you know, the problem dealerships have with traditional equity tools is they have a difficult time getting the processes around them, the technology, and then the right resources. And as a result, you know, the success out of the drive is sporadic at best. You need to automate it, and so by automating the equity identification and then stacking it onto a product like CarOffer to give the consumer a fantastic offer for his car, and then push that, you know, lead or opportunity with the customer's already filled out that information and says he's interested in a replacement, you know, right into the CRM or alert him with one of we call our RPM instant alert tools. We've basically done 90% of the work, right? And then the dealer gets the car, and hey, if he thinks we gave too much for it, you know, he can click a button and sell it on the CarOffer platform. And if he wants to keep it, he can keep it. And then do the same thing on the dealer's websites, right? So, yeah, to beat the competition down the street, we need to be able to offer more money for the trade. So if the dealers can implement that, you know, application on their own websites that you know, we can integrate with, the same type of, you know, synergies exist, right? So you kind of get the idea by tying all these things together, by leveraging the CarGurus 30,000 rooftops, you know, market data, all those type of things. It all starts to make a lot of sense.
Are you leveraging like best practices across the 5,000 rooftops?
Oh yeah, so we have a phenomenal, we call our trade manager team, and we have a matrix team, and we have a strategy team, and you know, the trick to it and the success to it is communication, right? You have to support your dealer base, and ultimately, if we can provide the service and they get the cars that they want at the price that they want, and they're successful with those cars, they'll come back, and more importantly, they tell others about us. And so when we go into a dealership, we have tools that can tell them exactly how they need to, their bidding strategies need to be laid out, or their matrix strategies need to be laid out for them to be successful. And inevitably, they'll come in a bit apprehensive, and it's a process, right? You're just tweaking and adjusting, and then they become successful, they're comfortable, and here we go.
So this has been a great podcast. And before we say goodbye, are you up to doing a little bit of role playing with me for a moment? Because I think your experience would be invaluable to some of the young entrepreneurs that watch the podcast. So if you're up for it, I'd like for you to do a little role playing. You up for it?
Sure.
Great. So why don't you be yourself, and I will be a young startup founder CEO. Okay. And I'm going to ask you a couple of questions. So, question number one, Bruce, is it more important to have defensible IP or to solve a huge problem?
To solve a huge problem. I mean, from my perspective, the way that you make money in the technology industry, which is what we're in, or basically any industry for that matter, is number one, you have to understand the industry to identify the problem. Right. And if you can identify the problems and then you can create a solution for those problems, you can monetize that. You know, the technology is hard to defend, and patents are much harder to defend these days. So in my opinion, it's much more important to solve the problem and then get your product to market and go get as much mass as you can, because ultimately it's a land grab.
Okay, so That's perfect. So the second question is, when raising investment capital, is it more important to have sales or to have proof of concept?
So proof of concept from my perspective, right? Because a lot of young entrepreneurs don't have the capital to go get sales until they, until they can build a product to go generate those sales, which requires the capital. So a lot of it, if you have an entrepreneur and you don't have the capability or the connections to reach that capital, you need to find folks that can help you do that, because you have to be able to sell your dream. And if you can sell your dream, I'm not going to say it's easy to do the first one, but you have to have people that believe in you, even if it's friends and family, right? To get off the ground. Once you get off the ground, that second round can be, then you can go with some sales in your back pocket. You prove the concept and you go raise a lot more money at a lot higher valuation. And then when you've been in the game as long as we have, it's much easier when you do it, the third and fourth time. But I proof of concept from my perspective, and being able to sell the dream is more important than sales initially.
Great. Wow, that's great insight. I wasn't expecting that answer. That is awesome. Bruce, I can't thank you enough for being a terrific guest. How can everybody reach you? What's the best of your social contact, like LinkedIn, Twitter, what?
Hey, I'm on LinkedIn. Go to CarOffer, CarOffer.com. I'm Bruce at CarOffer is my email address. So, we are in the weeds every day, right? So talking to dealers every day, we just love it and live and breathe it and expect to continue to do so.
Well, I can't thank you enough for being a guest and sharing all this time with us, and great insights. And I can't wish you enough luck in going forward.
Thank you, Phil. Great to be with you. And, it's been long enough. So I'm finally glad we got on the podcast, and wish you all the best.
Well, thank you very much, Bruce. I appreciate it. And everybody, don't forget to click the subscribe button below. And until next time, we'll see you later. Thanks.